Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. On the show this week, Owen Fitzgerald and I talked to Shane Monks O'Byrne.
I'm Shane Monks O'Byrne, the CEO and founder of Aikido Finance.
As he shares his story on Aikido Finance and their mission of democratizing quantitative investing. How he went from a grad with a computer science degree to a fully empowered startup founder in less than 2 years. The similarities between a rules-based mind and the merits of quant investing, finding co-founders and building the A-team, raising a $1 million seed round from angels in a US VC, and the parallels between building a scalable fintech platform and alpine climbing, all right here on Money Never Sleeps. Shane, you and I already talked about ice climbing when you and I first chatted, but one thing I also learned is that you used to be a lifeguard.
I was. I seem to have this obsession with claiming like accolades for myself and then subsequently not really using them too much. Like I'm a ski instructor, but I've actually never taught professionally. I just kind of like having that. And I'm a lifeguard, but like I've not saved too many lives, though I am a very, very avid swimmer. I do a lot of swimming, a lot of sea swimming, a lot of water sports in general. So it's just kind of a good skill to have. Are you a lifeguard?
I am. I actually found a picture of me in a lifeguarding swimsuit years back when I was a teenager.
I hope it's a tiny little Speedo suit, isn't it?
No. It's like a regular, normal-looking men's swimsuit. But I'm flying through the air after leaping off the diving board. I got to do something with this picture. It's hilarious.
Brilliant.
But Owen...
we have all worked as lifeguards.
Yes, but Owen has a special...
Technically, I'm the only one who isn't trained to be a lifeguard and probably couldn't save himself if he was drowning. So
how does that work?
I've told this story before. You might have heard this one, Shane. I was on my J1 in Montauk years ago now at this stage. We were taking whatever job we could find. One of the guys that was staying with us, he got sacked from a hotel being a lifeguard because he was asleep by the pool. He'd been out all night the night before. So they needed someone in immediately, and I was available. I was between different jobs I was doing. So I was like, yeah, sure. Lifeguard, outdoor pool, no problem. They didn't ask me if I could swim. I didn't lie to them about it. And I mean, like the deep end was like 6 foot. I could stand in it. So I figured, what are the odds that something is going to happen that I couldn't just grab someone out of the water very quickly. So I took it very seriously, but I'm not in any way trained. But that's my kind of claim to fame. I spent a summer as a lifeguard without ever knowing really how to swim properly.
So you know that in the States that'd probably be legal enough. Like to become a mountain guide in Europe, you have to go through like 10 years of training until you can actually take people out guiding. Whereas in the States, Pete, they don't actually have that same regulation. You can actually start guiding pretty much straight away and then just get your accolades as you go. So who knows, Pete or Owen, like maybe you can just like start saving lives as you go and then...
Yeah, I went through intense training. I even got to the point where I was trained in childbirth when I was a lifeguard. But listen, speaking of jumping right in, why don't we do just that? Okay. So given we all know each other, Shane, let's come back to your backstory in a minute. But where I wanted to start was tell us, what is quantitative investing and why do you, rather than anyone else, think it is important to democratize quantitative investing?
Yeah, so quantitative investing is quite a mouthful to say, and it can have this kind of feel of being very complex, but it's actually really not. Quantitative investing is just a rules-based approach to picking stocks. I suppose in my world, it's using computers to make investing decisions, and largely these days, that is the form of quantitative investing that's most popular. And this can go from anywhere from high-frequency trading that you see, the guys on the floor of the NYSE doing, all the way to much more long-term quantitative investing, which is factor investing, and that's the form of quantitative investing that I'm really interested in. So factor investing basically uses between 5 and 6 factors that have correlated with about 95% of investment returns. Those factors are value, quality, size, dividend, momentum, and volatility. And we build strategies, and quantitative investing builds strategies based off of these investing factors, which are really highly correlated with returns, right? But the problem with, I suppose, quant investing is that traditionally it's been just confined to sophisticated financial institutions. In the past, you've needed a lot of financial knowledge. You've needed a lot of data science and coding experience. You needed a lot of capital, like these funds are super elite, and a lot of time as well to build these portfolios. So there's just this really, really high barrier to entry. And of course, that's where we come in, right? Like we want to kind of tear down those barriers to entry. And I believe that ultimately it's really important because it comes with this movement over the past decade, really since the Great Recession, of democratizing Wall Street, leveling the playing field, giving everybody access to the tools which traditionally have been confined to elite organizations. So ultimately for me, it's really a move towards this movement towards, democratizing Wall Street, giving people the ability to achieve higher returns than just investing passively in an ETF. And I mean, I'm a total like data junkie and rules based junkie, and so I really like a very quantitative approach. It brings like a certain level of calmness as well. I think when you're following just like like a computer tells you what to do, you're outsourcing your thinking. Especially as a CEO, I do a hell of a lot of thinking, and so it's just like one less decision that I have to make, and so I definitely find it helps reduce stress for sure.
Obviously, there's been a huge amount of focus on people trading and actively managing their investments, especially in the last 2 years, 18 months since the pandemic. But I suppose your approach would be very different to the kind of things we would have talked about on previous episodes in relation to things like Robinhood. So there's a big, obviously, focus or impetus or drive, whatever, behind people now actively trading their accounts, which is on one hand great, but it probably flies totally in the face of the view that you guys are taking.
Yeah, it kind of kills me, Owen, to be honest, like seeing the stuff that's happening now. Like it is insane. Like the amount of activity in the retail investing space is like off the charts, considering that 1/3 of Robinhood's profit came from Dogecoin last quarter. I mean, like
Yeah.
really, really, really,
It's
really
crazy.
insane. And so that's the antithesis of the type of investing that we do, which is, super rules-based, scientific, logical. Like I can tell you the exact reason down to a decimal place why I'm investing in a company, which I suspect, a lot of retail investors now probably don't have. But ultimately, it plays really well for us that there is this activity in the retail investing space. It's great. I want people to get involved. The problem is it's so late in the cycle that there's a high chance of people burning themselves if they aren't doing it smart.
Yeah, I gotcha. And you answered the why you pretty well. Is that this calmness that you seek with this rules-based mindset is that's deep inside your head right away. So thank you for putting that out there.
No problem. No worries.
But listen, looking back through what you've done since finishing your degree in computer science at UCD, which is University College Dublin for all of our non-Irish listeners out there, and that was only just in 2018. What do you think it was that you learned as a software engineer at Workday when you were there that prepared you to take the leap and set up your own business that eventually became Aikido Finance?
So I was really stoked and really lucky to go into Workday after finishing college. I mean, I did pretty well in computer science, but working Workday was like a real dream. The place was, I call it like a beanbag millennial workplace. I mean, they had
Yeah.
all the video games, all the ping pong tables, and all the food you could eat. But outside of those luxuries, I worked building accounting software there, which to some people might sound incredibly boring. To me, it didn't.
It's rules
Considering
based.
it's very rules based. I'd been investing since I was 17, digging, knee deep in financial statements. I love this stuff. So I was there building consolidation software there. It gave me a really good, deep knowledge of accounting software and of financials. A big thing I learned in Workday was agile as well, which is a term that's thrown around quite a lot. I think working in a company as large as Workday, you see agile at its finest, at its most tweaked and like perfected level. And really, when you're early in a startup, you're trying to be agile, but you're not quite there, because if you follow everything by the rules, you tend to slow down quite a lot. And that was another thing that I did find from Workday, was that everything was perfect. Agile was perfected there, but it felt like a lumbering behemoth sometimes. Everything felt super slow. Sometimes I felt like there was so much money thrown in and we weren't doing as much like as effective work as we possibly could be. So ultimately, though it was a wonderful place, that's kind of what got me out of there. Like it was very kind of slow paced. I learned a lot from what not to do, and also a lot of things to do as well. While I was there in Workday, I was actually building and running another little mini startup, which was sort of the preemptive Aikido Finance. And this was an application called Investing Checklist, which ended up doing very well. Got about 10,000 downloads, I think, in total before I retired it there a couple months ago. I couldn't keep up the code base anymore. But that was essentially, you could search for any publicly traded company in the world and it would give you a quantitative breakdown on that company. And so I would spend like, I get up early in the morning, do it before going into workday, do it during lunches when I was in workday, do it in the evening, code it like 6 months straight. This was my baby. And that's certainly during my workday time. There was a lot of motivation and a lot of prep work to get me to where I am now. And it definitely felt like the base,
Yeah.
to elevate me up.
Yeah, I hear you. When you get to a point, but things are still moving slowly, you want to move quicker. And sometimes you moving quicker just means you going to do your own thing, right?
I kind of came to this realization that ultimately I have a good education. I have a home that I can fall back on, and I could continue in that job in Workday. But it's like we're in this age of abundance now. Why not just take that leap and just do it? There's only one life, and just hop in and do it,
Absolutely. Yeah, I'm going to come back to there's only one life later on. But thinking about you went through this whole phase really quickly, Shane. And leaving Workday, looks like that shortly after you left, you did get that entity set up that became Aikido Finance. But in between, you did a couple of things to quickly diversify your experiences. So tell me, what were the key learnings at each stop along the way, starting with turnkey farming solution, which seems a bit out of left field, but looks like productivity driven and blockchain enabled ag tech to me. What was the key learning at that first stop?
So I had a clear goal when I was going into Workday. I wanted to work for 18 months, get a load of experience, earn a bunch, save a bunch, leave, work freelance for a couple startups, one of which was turnkey, build a camper van, move into the camper van full time, and then start my own business. Like, I had this mission planned way out in advance. I'm currently in the Netherlands living in my camper van full time running the startup, and I did the 2 startups. So when I left, I went straight in and I started working freelance for turnkey farming and MedCred at the same time. So these were 2 startups. One of them I was lead developer on, which was MedCred, which is a medtech, early stage medtech company. And we actually built that product from the ground up and brought it live. Amazing educational. Turnkey farming, that was a really, really cool project because I'm definitely like environmentally focused as well. It's a really important thing to me, and impact investing is a big thing. But I was a project manager there. I took a lot of learnings from both of those jobs. They were very fast paced. In retrospect, freelance work was not for me. I found it quite stressful. It was a good stepping stone to working for myself, and that was ultimately the goal with it, to get these skills so that I could work for myself. Turnkey farming, I learned a lot about the management side of things. I'm a complete PM junkie, and I really got to hone in on those skills and get to use them even more. I learned all about interviewing people and how to manage a team and to hire people that you really get on with very well. I learned that is a really important thing because there was some disjoint there when I was there, like among people we're hiring and people I was working with, and definitely like the whole importance of having people that you can work with and foster a relationship with, I learned is really important in turnkey. In MedCred, I definitely learned the importance of the power that just 2 developers can have when they're let loose versus like working in this Scrum team in Workday, which was so slow and like perfect in inverted commas. Like, we killed it, myself and my buddy, building this, like two freelance guys building this complete product, and the speed that we got this thing out in and built this like proper industry level medical application was staggering. So yeah, they were 2 fantastic experiences.
Okay. Pulling all that together very quickly, obviously based upon, hey, let's get out there, get this experience, move really quickly, get some good diversity, and then boom, we're going to go launch a business. Okay. So tell us now at this point about Aikido Finance and how you decided that access to quantitative investing was a problem that you wanted to solve, that you were going to put all your energy into.
Yeah, so I think I mentioned before that, I really love this idea of a quantitative rules-based approach. I find it actually very relaxing. It really chimes with me. I suppose coming from a computer science and a data science background, I like things to be logical and ordered. Maybe there's a bit of OCD in there as well. I don't know. There's a famous quote from W. Edwards Demings, and he says, "If you can't describe what you're doing as a process, you don't know what you're doing." And that quote has really stuck with me since I heard it a few years ago. And so I suppose if we think about the philosophy at Aikido, we believe in data, we believe in evidence, we believe in the scientific method, we believe in process, we believe in structure. So I suppose our take on quantitative investing is all about long-term and systematic thinking. We essentially want to look back, way back into the past in order to try and predict the future. So a big inspiration for me was a book called What Works on Wall Street. I've definitely talked to you about it, Owen, possibly
Yep.
you as well, Pete. But like that book is the Bible of investing for sure. It's an absolute must read. Written by James O'Shaughnessy in the late 90s. It did receive a lot of traction at the time, though largely seems to have been kind of forgotten about. What James does in that book is he backtests all the way to like 1926 individual investing metrics to show their correlation on investment returns. So he goes through lots of metrics in the value factor. He goes through lots of metrics under the quality factor, lots of metrics like, dividend paying. And he puts these things together into strategies, very, very simple strategies. And the book is basically a catalog of strategies. We put essentially his book into code. Of course, we
Wow.
have lots of our own strategies there. They're pulled from research papers, academic journals. Some are pulled directly from O'Shaughnessy. At least we try to pull them as close as possible. But we basically put this old book into code, and that's ultimately where Aikido came from. Is these simple strategies that are not high frequency trading, but are quantitative, are really long term thinking. He outlines strategies in this book that return 18, 19, 20, 21% return every single year, like going back to 1926. And they're not very complicated. Anybody can do them. It's just the problem is the knowledge isn't there and the tools aren't there just yet. And I suppose that's where we come in.
Okay, that's interesting. What works on Wall Street? If it works, it works, right? But I'm sure that some learnings along the way that you've sprinkled in to this method, some things that you guys figured out natively, right? Like when I started working with startups, I took the episode 31 show notes from the Full Ratchet podcast that talked about what are the 10 components of a pitch. And that just really resonated with me. And I started working on that basis. But then over the years, I read a book by Jason Calacanis called Angel. I read a few other books. I came across something that Y Combinator was using and Sequoia Capital were using, and I kind of just combined it all together, right? I'm sure that even in the short life so far of Aikido, that you guys have taken some of your own native learnings and brought this into the business, yeah?
What an interesting question, Pete. I love that. Yes, there is a very enticing world, which is technical analysis, which I thought was the devil before, being a very purist, I suppose, value investor originally and then full fundamental investor. I would only look at things that are on the financial statement, right? Really hard metrics. Technical analysis is looking at price movement. And there's this war among value investors against technical analysis. Ultimately, I'll do whatever returns well. And what we've learned along the way is that technical analysis is very powerful, and we're only going to be implementing it more. What we find is we have these base level strategies. Let's say, okay, I want to only companies with a price to sales ratio of less than 1 and a return on equity greater than 50%. That's your base strategy. On top, obviously super simple that one is. On top of that, then we place some technical filters. So, okay, I want only those companies where the 50-day moving average has moved over the 100-day. I want only those companies that have had a positive 6-month price momentum. So over the past 6 months, their price has gone up. Bunch of other things we could add in there, Bollinger Bands, RSI, like there's loads of stuff, and we're still actually in the relatively early stages of adding more technical stuff in, but that's been a really big learning for sure. Another learning has been this war between short-term and long-term performance, which is the never-ending war. Unfortunately, getting people to invest for the long term is really, really, really hard. You can show them all the graphs going back to 1926 that you like, but if you underperform for 6 months, that's going to be really hard to stick with, especially if you're losing like 40% or 30% or whatever. So yeah, so what we're really doing with our strategies now is going to segregate them. So we give people the option. We're not forcing them to do one or the other. It's like, hey, have some short-term strategies, have some long-term strategies. Do what you wish. Take your pick.
Yeah, I mean, I've tried the app myself, obviously, and it's pretty cool. Is that you register and you add in some details on your risk profile and risk preferences, and then you're off to the races and you pick a portfolio. You put in the amount you want to invest, and then you get a suggested portfolio that you can either execute yourself or that you can execute through the broker that you guys have integrated with.
Yeah, bang on.
That's the long and short of it, right?
Pretty much, Pete. I think you said everything.
I've been in it a few times. I love it. It's a great app. But listen, I mean, having figured out that this is what you wanted to do, Shane, how did you go about building the core team, including Connor Naylor, Dan Roberts, and Tom Nolan? And how did you get the team to gel? Tell us how that all came about.
So advice that you'll hear time and time again, especially from the Y Combinator team or other startup places, is what does really successful startups in Silicon Valley do is they form teams of close friends. You don't form the team initially by like trying to pluck people and then make the team work. It's like, you know, the team is going to work from the outset because they're people that you know and trust right at the beginning. Jim Collins talks about getting the right people on the bus at the very beginning. Make sure you don't get the wrong people on the bus because they're hard to get off once they get on. So all four of us were really good friends when we formed the team, and it just so happened that I seemed to have formed a team with some of the smartest guys in the whole of Ireland. I mean, four computer scientists, all of us finished among the top of our years in computer sciences respectively. We met, myself, Connor and Tom, when we were in Workday Dublin. All of us were engineers there, and then myself and Dan, we've known each other since we were like 5 years old, I think. Something like that. So we were just young friends, and just luckily, like, yeah, the friendship was the first thing, and the company formed around that. Initially, it was me and Connor, and we were super inspired actually after going to a talk by Y Combinator in Dogpatch Labs. So we had been building this backtester ourselves. So we'd read O'Shaughnessy's book, we were looking at these stunning results, we wanted to prove out these results, and we actually coined the project Doubting Thomas, as in we wanted to stick our finger in the wounds in Jesus's hands and actually prove these results. We started building this backtester, we started seeing the results ourselves, we were getting really stoked about this backtester we had built. I heard there was this talk by YC on in Dogpatch Labs, got Connor to come. We went to the chat. There was a couple of alumni that were giving talks there. We were super inspired. We left Dogpatch Labs. We walked across the street. We sat down in an Eddie Rockets diner, and for the next 6 hours, we fleshed out the entire business plan of Aikido. We sat down. We did everything from projections to who was going to come on the team to rough like prototype, paper prototypes. And then we're like, okay, well, who are the first people? Who can we get on board to build this product? And the first two people that came to mind were the two people that said yes and ultimately formed that founding team, which were Tom and Dan.
And did you find that because you knew each other so well, you kind of naturally fitted into certain roles, or was there a, well, who's going to be CEO, who's going to do this?
We were very lucky, Owen. That was never a question. And I'm thankful that that didn't come up. I mean, Connor just straight away, he's like, you're going to be the CEO. And I was like, yes, that sounds like a good plan to me. But, you know, Connor's like a brilliant maths head, so he's our CFO and main quant on the team. The guy's a complete genius, and I mean his mental math, he'd be like, he did some mental math the other day and my jaw dropped. I was like, how did you do that? My math is nah, it's all right. Like, I'm probably a better people manager than mathematician. So I think we fell into the roles perfectly. Dan is a complete, like, he would classify himself as an artist first and programmer second. He's our front end developer, and I think pretty much everybody would agree the site is pretty beautiful looking.
Looks fantastic.
Amazing. And I was going to ask you, Shane, that, you know, when you sat down with all of them and said, hey guys, you know, at Eddie Rockets, let's do this. Okay, quant investing. And I was wondering if you got some blank looks, but it sounds like with Connor that was never going to be a problem.
Connor knew exactly what we were up to. Myself and him were building the backtester. Tom knew a bit about investing. He is a complete crypto head and has been for a while. So he understood it. Dan, however, coming from a very different background, would have been even more so than not knowing about investing, would have been probably a little bit like, I wouldn't be into this whatsoever, you know, as in like almost a dislike. Now, you know, it's great. Everybody's so into it, you know, everybody knows the upskilling was fantastic. Like, everybody got into it straight away. Everybody learned it. Everybody understood it because it just makes sense how we're going about doing it. A really important part though of the team's formation was ultimately us going to Level 39, startup incubator in London, which we did straight away. We formed the team. We were working unpaid for obviously a good while. And then we basically got accepted into this incubator in London, went over and worked over there for either 3 or 4 months. And that initial bonding experience, I would say, was absolutely critical to getting us to where we are now. Because we're a completely remote team, and I do plan to keep that way apart from brief periods where we meet together and work from a co-working space, I feel like that, you know, forming that relationship at the very start and really nailing everything down was really imperative. I mean, we had sticky notes everywhere, like sorting out our scrum boards and our, you know, our complete release plan on the wall. We had the whiteboard there. We had daily stand-up, like actual physical stand-up, and it was great. I really enjoyed that, and now we're completely remote, and it just bonded us together.
Were you guys living together as well as working together?
Yeah, myself and Connor were. That was very fun. That was a lot of fun. London was a lot more loose than Ireland was last summer during COVID, that's for sure. So yeah, that was a lot of fun
Wow.
living with your co-founder. We get on like a house on fire. I mean, like nicest guy I could ever possibly ask for as a co-founder.
Who did the cooking?
Okay, so we both cooked certainly individually, but Connor has the craziest diet I have ever seen, ever seen. So he just thinks of himself like a human guinea pig. So, for example, we were living in Spain together as well just a few months ago. He was on the ketogenic diet for 6 months straight. So
Oh
he was
yeah.
in ketosis. So very strange. So he'd sit down with a trough or just a giant lunchbox and he'd just have 3 bags of spinach. He'd pour it all into this box and then he'd just eat the spinach. And then when that was done, he might put like he was big into his shrimp as well that he'd put on top. There was one time that
Wow.
he was feeling really ill when we were in London, and he remembered when he was a kid that his parents used to squeeze lemons into a glass and then put loads of garlic in and then drink that, and that was their way of getting healthy, right? The hippy dippy way of getting healthy. He got 3 lemons. He squeezed the entire thing into a cup. He got an entire head of garlic and like put it into this thing, and the whole apartment stank. My eyes stung and he was drinking it and it was like nuclear waste, this stuff, as he was going down. Like I could see the pain, and then his belly was in shreds for like weeks, for like, yeah, definitely days after that.
Wow.
Yeah, I don't want him cooking for me.
Yeah, yeah. No, I got a good recipe for him with some lemons, with some garlic, with some shrimp, some kale too. That'll work. All right, but maybe not a whole head of garlic. But listen, great that you guys had that experience. So critical, and really critical as well. Once you get in front of the investors, is that they really want to see how you are together as a team, right? So it's awesome that you guys did that. Now you just raised a $1 million seed round, roughly $1 million. Congrats on that from the US VC Go Ahead Ventures, but also a group of angel investors here in Ireland, most of whom, if not all, are Irish. Can you tell us about the process you went through to get that round started and how you guys pulled it off?
Yeah, so I certainly had a really interesting journey raising funds, as I think every founder has. Every founder has their own unique fundraising story because it is a journey. The interesting part about, I suppose, my fundraising journey, there was many segments along the way, but a large part of it I raised while living on the road. So I was having many investor meetings, like from a beachfront in Kerry or from whatever, and I actually found that that really helped with the fundraising. I learned so much from pitching and many pitches that I do. Investors love like that light-hearted, like when you can turn the laptop around and show them like out at a beach when you're in a camper van, they're like they can't
Yeah.
believe what the hell you're doing. The charisma definitely, like, and just being light-hearted played such a big role in it. I found that storytelling was such a big thing as well. Initially, you go in when you first are, you think it's all about the pitch, right? And what you learn as you pitch to more investors is that pitch is almost second. Like you go in with telling that story about, going across and sitting in Eddie Rockets for 6 hours and fleshing it out, and then maybe going to the pitch afterwards. And frankly, if you can go through the whole thing without ever like sharing your screen and showing your pitch deck and just do it all verbally, all for the better. It comes across even more. But
Absolutely.
we ended up with 14 angels on board, and obviously we got go ahead there, and we had some great support from EI too. But we got a couple of really high profile angels on board early on, right around the time we went to London. We got some really just a couple really key investors on board, and it got us to the MVP stage. It got us to be able to show, hey guys, we've built this. Look at look at what we've done. We could show our work. After that, once you have those, that first couple, more seem to come. Obviously it's still a hell of a lot of effort pitching, but the more you're doing it, you can answer all of the most difficult questions because you've answered them all already. Investors enticed by the fact that there's already that trustability side. There's, oh, I know that guy's name, he's invested in you, that's pretty cool. You iterate on your deck, learn what works. A few really interesting things happened towards the end of the pitching process. We'd raised probably like 650,000. We were just about there, and just before Go Ahead joined, I was in Spain and I got a couple phone calls from guys who wanted me to fly out to Milan, investors, to come invest with us. They were, for a significant sum of money, they were looking around like the 350K mark. And there was 2 separate individuals who wanted me to fly to Milan. As it turned out, neither of them knew each other, completely separate. As it turned out, there's a whole long-winded story here, but they essentially both wanted to launder money through the company.
Right.
They wanted to basically give me more funds, like 100K extra on top of the 350s, coming in at 450. I would transfer a portion of that like back via cryptocurrencies. One of them wanted me to give me money in a briefcase in Milan for me to then take back. And this was like 2 separate ones. I actually went to Barcelona. I took the train up. I was was like, this guy's kind of sketchy, but I'll go up and meet him anyway. Had a wonderful time with my girlfriend in Barcelona, but ended up sitting across the table from these two guys. I had the business plan printed out. I had the pitch deck all printed out. I was prepped for the pitch. I'd already pitched like 1,000,000 times. And they came late. They were like, yeah, we don't have very much time, actually, dude. They didn't look through my pitch very much at all. I was like, yeah, we're happy. Oh, we're going to give you extra and you give it back to me in crypto. And I just couldn't believe it. Like, this had happened so much.
Wow.
And it gave me such this insight into the criminal world. So like obviously it was no straight away, but you got to stay on your ball. And there's just like 1,000,000 stories like these, and it's just really educational, the whole fundraising process.
Oh, absolutely. Yeah, I don't think they were all that smart because as people are quickly learning that crypto is a lot more traceable than fiat, old-fashioned money, right? So yeah, absolutely. You did get the angels on board first and then Go Ahead Ventures. What was your introduction point to Go Ahead Ventures? And I'm asking you this specifically because for Irish founders, getting connected with a US VC that wants to invest in their seed round isn't something that's easily done.
No, definitely not. My plan was not to go VC. I mean, like I was, right from the get-go, I was like, everybody was saying to me, I don't go VC, probably don't go VC. There's a lot of, and I don't know why they were saying that actually. It seems like silly advice. The plan was never to go VC. It was always to keep it angel in the seed round. But we oversubscribed. Our target was 700 and we hit like over 900,000 euro, right? So we way oversubscribed, and they reached out to me, which was really, really, really cool.
Really?
I was towards the end being reached out to by a few different VC firms. I had a couple things on the table at the end, and ended up going with Go Ahead. The team was amazing there. They got 3 guys who run it, 2 of whom are probably my age. They're both Forbes 30 under 30. They're like Silicon Valley based techies. They're pretty hands off as a VC. Like they're just like, go for it, guys, and we'll just feed you stuff. Like we're really nice like conversations. But yeah, really happy to have their backing. And as I said, it wasn't in the plan.
And Pete, I probably didn't tell you, I had the pleasure, obviously, of talking to the Go Ahead guys. Great guys, and absolutely look a real, obviously, addition to the team and part of the business. I died a little bit inside when I talked to them, given that they raised their fund while still in college.
Wow. Well, they're Stanford,
conversations, they were Stanford, but I mean, they raised, I think, $15 million the first time and 57 the second time, and they're a lot younger than me, and definitely a lot younger than you, and it was that easy is the way they made it out to be. And I remember writing down stuff, and at that point I was like, I'm not writing that down. I just, if I have to remember that, that'll break my heart.
Yeah. Oh, I know. Well, like I said, it's Stanford. You're in the Valley, more or less, when you're there, and you're making some great connections. You've got...
like I said, the guys are fantastic, like genuine, absolutely great what they're doing, and what they're doing with the fund and everything. But at the same time, I was like, my God, is it that easy? Like,
yeah, yeah, no. Someone asked me the other day, Pete, why don't you just go launch a fund? I'm like, it's not that easy.
Oh, and Pete, you know what I loved about them as well was they are quant. They're a quant like VC firm, so they come to their number purely through a computer. And like, I'm sure they have other things as well. That's probably a little bit unfair, but their method of like everything from valuation to how much they invest is all quantitative. So it's really cool.
Oh yeah.
And I knew that like they got it straight away. Like you guys are an ideal in terms of similarities in your approach to things. Like it's a great fit.
Yeah, I was listening to Michael Maples speak on Invest Like the Best with Patrick O'Shaughnessy yesterday morning. And he's a longtime seed stage investor in startups. And he said, listen, when you get into the room with your investor, or hopefully who will become your investor, that you've got a certain view of the world and you've got a certain view of the future and how things are going to unfold. And you have built the team to bend the arc of the future towards your vision. If you can't get that investor on board with that in the first 5 to 10 minutes of the meeting, get out, right? Get to the know. Get some lessons learned, figure out who they might know that might be able to help you, and get out. But it sounds like with these guys that they already believed in that same common future as you.
Yeah, I mean, they were super quick as well. Because they use this quantitative method, that they could make the decision like, straight away, almost. It was within a few days like that we had the offer. So yeah, for sure.
Okay. And then with the angels that you brought on board, did you notice a consistent trend amongst them that you can point to and say, well, we could point to a reason here why we think that they were ready?
Angels are tricky. There's so many different reasons why an angel investor might come on board. For some of them, it could be we have some financiers who are angels, right? They totally get that there's this new wave of investing that's coming. And if wealth managers don't get with quant investing, they're kind of going to get left behind. And these guys would have been in that space before. They get it from that perspective. Some of them They believe in the team and the founder. And that's honestly probably like a large reason why they would have come in. Certainly the pitch really helped, right? They believe in the team and the founder. And that's a huge thing for investors is like,
Mm-hmm.
ultimately you can kind of pivot on the product, but if you don't have the right people on the bus, well, it's never going to launch, right? So I mean, those are your two main things. The third thing is
Yep.
obviously the size of the market and the potential that it has. Kind of comes into the product vision there as well. So it's hard, Pete, to nail down, I would say, like what one unified thing does everybody have, other than a belief in the team. I would say is the main thing.
Well, yeah, I mean, you nailed early stage investing right there. It's the team, right? Because you're investing in the team. That product isn't totally in market yet, or may not even be in market or even built yet. So it's people that you're investing in. So you got to love the team.
And Shane, let me ask, I have two kind of questions that are related. It ties into that piece around the team and everything. The company, I suppose, is built in your image, sort of personality of you and the guys. Your focus on quantitative investing, your beliefs, your passions and everything. So that obviously has gone a huge way in terms of even being able to pitch. And like you said, pitching while you're on the road in your camper van, like that is you as a person, and it's you and the team as a person. So that obviously helped hugely, I'd imagine, in terms of the conversations. People obviously bought in, your focus on impact investing, you're living that life. So, you can see the connection between it. But then I suppose my second piece of that is, have you found then that there are times that your personality traits or your ideas of the world will work against you in terms of trying to build a business?
What an interesting question as well. I've been thinking about this a little bit recently. As we're growing and getting bigger, I'm thinking, should I be careful what I start saying? Should I normally I wouldn't have much of a filter, but as we get bigger, it's like, should I say everything? I don't know. And I remember one time I was going for a job. It was Workday, and I was going for this other company, right? I won't say their name. And I nailed that interview. Like, I did so well in it, I thought. And I didn't get the job. And I was totally baffled as to why I didn't get the job. And I actually sent the HR person afterwards a message like, can you just explain to me why I didn't get it? I'm kind of confused. Like, the technical interview, perfect. Like, everything went really well. And they were like, yeah, you were way, way too casual in the interview. You had your arm over the chair beside you. You were leaning back in your chair, and you cursed. And that's the kind of thing that I have to be careful of, because at the end of the day, we are a business. We are an investment business. Ultimately, we're certainly not advisors or like money managers, but people's cash is at stake. There's a level of professionalism that you do need to bring in. In terms of raising funds, no, I will never ever lose that fun and playful side, ever, no matter whether it's Series E, or whether it's going public or whatever. Never lose that. As for like how we deal with customers, yeah, I think as we grow, you likely maybe have to put somewhat of a filter maybe on what I do personally.
Yeah. The rule of thumb is 45 minutes in person is equivalent to 4 hours on Zoom. So if you want to get that type of relationship building process underway with an investor, be honest, right? Yeah. Just get that out there up front, because you're going to save everybody a lot of time.
The other part, you kind of answered it earlier when you were talking about even the technical analysis piece. So whilst your view of the world is a particular way, I suppose your product and the company has to reflect probably more than what you believe in that sense. You have to still be open to other areas that clients or customers want to focus on or want to be aware of.
Customer driven design is everything. Ultimately, we listen and we build. They ask, we answer. It's pretty straightforward, right? We come with our hypothesis initially and then likely change it so much it's barely recognizable. And if you've done that, like, you've done well, because you've hit product market fit.
Because it's fascinating, because like we've had Andrew Milani from Premind on a few times, talking about obviously their view of the world and the approach that they take, in terms of the noise and the impact on companies, and it's the more short-term impact on investing versus, I suppose, your fundamentals view of the world.
Andrew's a genius. Like he can go do that short term. You really, really, really like next level. It's a string to that we don't have to our bow, and frankly, there are probably many things that we would start doing before we would start looking at that.
We did 2 episodes with him. The first one way back when, and the second one more recently, and I could tell the change from having just been inside, pouring through all this data, looking at all these relationships between these prices and these news stories over and over and over again to build this model. And his mindset changed. It didn't change for the negative. It was just different, right? And you could tell that just from this process that he's gone through to get that machine built, which is freaking amazing.
But he's built the whole thing. Like, he's given the CEO
Yeah.
duty to his co-founder, and he is like
Yeah.
building the entire thing. The guy's so smart.
Yeah, wicked smart, as we'd say in Boston. Right?
Yeah.
But listen, speaking more of the business reflecting you, right? Do you think that there is a parallel between building Aikido into a global platform and becoming a professional mountain guide, which I know is another one of your ambitions, taking people into the Alpines to ski and to climb?
So that's a super interesting question, because I have for a few years now wanted to write a book called Parallels, because I do lots of different things, be it climbing and skiing, be it investing, being business, being mindfulness and meditation is a huge part of my life, be it socializing, be it whatever. There's a lot of different strings to that bow. And what I've noticed in ultimately not a very like long life, but a very full life, is so many parallels between all of these different things, like an abundance, so much so that I started writing them all down. So I have an entire book now written called like Parallels. That's internal. It's still like, you know, when I have some more free time, whenever I retire at the age of 30, then I can like then I can actually start to flesh this book out. But a few that kind of come to mind, specifically between investing, I suppose, and life, and investing and like that mountain guide kind of life. One that sticks with me a lot is there was a book written by Annie Duke called Thinking in Bets. Annie Duke's a professional poker player, and she basically talks about life is poker. Life isn't chess. Life is ultimately, there's, you know, X number of decisions. We have to choose which one is the correct one to take. Everything has a percentage chance of success, and investing, certainly that's the case, right? There is this level of risk that you take in taking your decision. That's your bet. In the Alpine, it's, will I climb this right now? Is it the right time of year to be climbing up this frozen waterfall? Or is it the right time of day to be skiing down this, you know, 35-degree slope? Another one from Warren Buffett, he's famous for the margin of safety, of course. That's one of the things that he's best known for. And this one's really obvious, right? But when you are skiing, doing maybe a multi-day tour, maybe you're out in the Alpine for a few days, you got your sleeping bag and your bivy bag, you don't want to push it to the extreme. You don't want to take it to that 100%. You want to take it down to your 75%, right? You want to give yourself that 25% buffer, so you're not always on the edge. You could die. Big thing in investing, of course, you know, when you're valuing a company, traditionally, I suppose before the quant days, you would put a valuation on the company and then you give yourself a margin of safety. You'd automatically bring it even 20% lower than that. Another one
Wow.
that I really like is no risk, no reward. You know, the fishing is best where the fewest go. If you take no risks at all in investing, you're not going to do anything. You'll be stuck in a 1% on post coupon, or I don't even know what that is. And you know, if you take no risk in the Alpine, you're going to have no fun, right? You got to get out there and you got to ski, you got to climb. Another couple, because these are fun. Always have an exit strategy in investing. For me, this could be adding a stop loss to an investment. I tend to use a 20% stop loss in every position, so that if it drops by 20% the price, it'll auto sell. It's like a systematized panic sell. In the Alpine, you always want to have an exit strategy. You look at the map and you know what your way to get out of this place is. If an avalanche comes in, if it gets nighttime, if you get caught in a whiteout, you know how you're going to get out.
I want 10 more, but I'm not going to ask you for them because I know
That's a
you've already
separate
got
episode.
them. You've already got them, and you know, maybe we'll wait for the book.
Yeah.
Right.
You've a lot to wait for, though. It could be a while to get through.
Yeah. No, there's so much there. You and I talked about this. I did a bit of climbing back in my heyday, back in the 90s, and yeah, there is a mental toughness that you need to be able to stick with that. And you know, let me see if this one works. My first time ice climbing, I had an experience of something called disco knee, which is when you're up on the sheet of ice with your ice axe and you've got the crampons on your boots and you're digging in and you get a bit nervous. You get nervous, you hold your breath. When you hold your breath, your muscles start spasming a bit and you start shaking. And when you start shaking, when you got your foot dug into the ice with spikes on your boot, then, you know, you're going to fall and you're going to go. So if you get nervous when you're investing and you see that price start to squiggle a bit, you hold your breath and you don't make a decision on what to do, you're going to lose your shirt, right? Are we there?
Pete, you want to co-author this with me, man?
I'd love to.
Love it. What a great analogy.
Yeah. Climb or fall, man. Climb or fall, right? Listen, getting a little bit more philosophical here. There's a quote at the bottom of your LinkedIn profile that gives some insight to how you think. Every man has two lives, and the second starts when he realizes he has just one, which is from Confucius. In the spirit of Eastern philosophy, is that where this all came from? Your whole mindset around this?
Yeah, for sure. So I like massively into philosophy, psychology, meditation is a huge part of my life. And as your life gets more stressful, I think you realize that becomes more and more important. Eastern philosophy specifically has always chimed with me a lot. And I think just in the high-paced world of startups and quant investing, mindfulness is key to keep you grounded and to just take a deep breath every now and then and get rid of that disco knee.
Yeah, absolutely. But the business name, Aikido Finance, are we pulling on that same thread? Is there an influence there?
You're absolutely right. So Aikido is a martial art, right? It's a Japanese martial art, but it's not a very fast-paced martial art. It's very slow, it's very calm, it's very controlled. It uses your opponent's momentum against them. I suppose there's three reasons why we chose the name Aikido. One is this whole idea of using your opponent's momentum against them, because momentum is a big factor in investing. It's one of those 5 or 6 factors, right? The second reason is it's all about staying calm, staying relaxed, staying really controlled. Again, that's like totally core to what we're trying to do at Aikido. Very calm, very relaxed, very controlled. Third thing is Do or Tao, which is there's 3 symbols that make up the word Aikido, and the last symbol means way or path. And I always thought of that as being kind of, the way to financial independence, the way to kind of correctly invest, the way in general. So those are kind of the 3 reasons that we chose the name Aikido.
Awesome.
I like it.
I'm going to say what B.B. King said to Bono in 1987. Those are some heavy lyrics for such a young man. Anywho, listen,
Brilliant.
Last 2 questions. What's one thing that you found to be true in maintaining your business success that others commonly believe to be false?
So I was super inspired by the book The 4-Hour Workweek by Tim Ferriss. That was a life-altering book for me. And it's all well and good. Parts of it are really inspirational, but parts of it are kind of incorrect for people at a certain stage in their life. Right now, I run a startup, and I certainly can't do a 4-hour work week, right? That's that's like the first part. But something that Tim talks about a lot, Tim Ferriss, is the idea of like cutting basically all meetings out of your life. And this is a common vibe among a younger tech-orientated age group, is reduce meetings as much as possible. You should never, ever have meetings. If you have meetings, you're doing something wrong. This is like said over and over, and I've certainly, over the first year of the company, we're now just started into the second year, I was like, really, this was always the top of my mind, is reduce meetings as much as possible. And what I've really realized now is like, yes, do have meetings, and actually almost once a week have a meeting with no agenda whatsoever, where you get everybody in the entire team who has a really strong decision maker together, where you just huddle and no agenda, and you just talk and you brainstorm about what you're going to build and how you can answer the customer's problems. So ultimately, do have meetings and have no agenda meetings, and they're really damn important.
Yeah, Jeff Bezos would hate that. His 6-page memo going into every meeting, and people start the meeting with reading that memo for the first 15 minutes.
Yeah.
No PowerPoint.
I seem to go against the grain on it. It's been a recent discovery, Pete, but I think they're important.
Listen, if like I said, something that others commonly believe to be false that has worked for you, right? And keep doing it, dude. Something's working, right? Owen,
Yes.
would you like to do
I'd
the
love to.
honors? Por favor, mi hermano.
I'm really interested now, having talked to Shane for the last hour, as to what the answer to this is going to be, given what he's already told us. So, Shane, please do us the honors. What's one thing people wouldn't expect to know about you?
Okay, so you guys did send this question to me beforehand, and I was doing some thinking. And there's like obvious answers that I could say, because I have loads of like crazy stories. So one that kind of pops to mind was like, I was homeless for a stint of time, living in the snow full time under a tarp, just eating potatoes while I did my level 1 and my level 2 ski instructorships in the wilderness of Canada. But that seems too obvious to say. So
Did you have a dog named Bilbo Baggins?
I didn't. Thor is my dog name,
No. Okay. All right. Go ahead then.
But what I thought was a little bit more milder and maybe a nicer answer to it is my 2 favorite genres of music, which are very contrasting, which I think goes quite with me as a person in my strange love for investing, which seems to conflict massively with my total hippiness, and that is techno and classical music are by far my two favorite genres. And techno, very much to get into the zone, that gets me into flow state straight away. Really, really hard thumping techno, and then to unwind after work, I'm a complete nut for classical music and listen to it pretty obsessively.
That's awesome.
That's crazy.
On the techno side or electronica side, have you checked out the Audius app yet?
No.
No, it's kind of a token-driven ecosystem, and it's all just people contributing their own music, and a lot of the stuff that ends up being up at the top ranked and most played, and hence most awarded tokens, ends up being electronic music and techno. So I was checking it out earlier, some really cool stuff in there, and I got to figure, if your mind works on a set of rules and process and rhythm, yeah, that makes a lot of sense that you're doing your best work when you got that stuff pumping into your head. Pretty cool.
It is crazy though, the difference, because I like avid hip hop fans. I've been a big hip hop fan, but yet my wife runs a music academy. She's a classically trained cellist. Would have been one of the top players in the country. Everything in my house is music and music instruments, piano, cello, you name it. I can't play a thing, but yet that's all I hear in my house versus my love of hip hop and sometimes like hardcore hip hop from the 90s. But yeah, I actually find it's a nice balance then at the same time.
Music is an amazing thing. My mother is a professional harpist. She'd be one of the best harpists in Ireland, and I was surrounded by music my entire life, and it's I couldn't imagine a world without music.
Yeah.
Crazy. Awesome. Well, Shane, thank you so much for coming on to the show tonight. This has been extremely eye-opening for me, and just makes a heck of a lot of sense at the same time. So really appreciate you spilling your guts. It's been awesome. And best of luck to you and the team, and just keep doing what you're doing.
Yeah, definitely.
Guys, thank you so much. I had an absolutely amazing time. And we'll talk soon.
Awesome. That does it for this week, folks. A big thanks to Shane Monks O'Byrne for opening up his mind to help us figure out why he does what he does. Links to get in touch with Shane and learn more about Aikido Finance are on our website at moneyneversleeps.ie. So check us out online and subscribe to our Money Never Sleeps newsletter as well. If you like what you heard, we would sincerely appreciate a 5-star review on Apple Podcasts or whatever platform you're listening on, as it helps others to find the show. And remember, Money Never Sleeps is spelled as all one word. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm the founding partner at Norio Ventures, and I'm an early-stage startup advisor and investor helping fintech and digital asset startups get their product to market, build traction with customers, and raise funding. If you'd like to talk to me about your business, get in touch at pete@norioventures.com. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.